This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 7th, 2021. Our question this week is, what is the Fed balance sheet? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 0.41% on Friday and was up 0.78% for the week. The S&P 500 increased 0.17% on Friday and was up 0.94% for the week. The Nasdaq decreased minus 0.4% on Friday, but was up 1.11% for the week. Looking at the week, we can see that there were 10 up finishes versus 5 down finishes for the major indexes. On Monday and Wednesday, the Dow Jones Industrial Average and the S&P 500 finished down, but the Nasdaq finished up. On Tuesday and Thursday, all three major indexes finished up. And on Friday, the Dow Jones Industrial Average and the S&P 500 finished up, but the Nasdaq finished down. The Dow Jones Industrial Average and the S&P 500 hit all-time highs on Friday. The new unemployment claims were 385,000 versus 385,000 expected. Private company payrolls in July increased by 330,000. Well below the estimated 653,000. However, non-farm payrolls increased by 943,000, which was better than the estimated 845,000. U.S. household debt jumped to nearly $15 trillion in the second quarter. Fed Governor Christopher Waller stated that the Fed could possibly start reducing bond purchases in October, but Fed Vice Chairman Richard Clarida said that interest rate hikes would not increase until 2023. New unemployment claims, private company payroll changes, non-farm payroll increases, U.S. household debt, Federal Reserve governor statements on bond purchases, and Federal Reserve announcements on interest rates are all news, and news drives the market. Good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the Fed balance sheet? The Federal Reserve's balance sheet is a financial statement produced by the Federal Reserve, and it is updated weekly. That shows what the Fed owes and owns. Like balance sheets of corporations, the Fed's balance sheet lists assets and liabilities. U.S. paper currency and money that commercial banks like J.P. Morgan, Citibank, Bank of America, etc., held by the Fed are counted as a liability. Things that the Fed has purchased, like U.S. Treasuries and mortgage-backed securities, are listed as assets. The Fed's balance sheet has been rising for several years, especially since 2070. And in the last couple of years, it has basically gone parabolic in response to the coronavirus pandemic. Most people do not realize that the Federal Reserve creates money out of thin air, and it uses that money to purchase its assets. They do not use taxpayer dollars. They create the money that they need by typing numbers into a computer system. What would you do if you could create money by typing numbers into your bank account? Would you invest the money? Would you buy stocks? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it is not taught in school. So you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can get from the library. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out the list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending August 7, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Datadog, ticker symbol DDOG. It's in the first column. It increased 19.17% for the week, but was down minus 0.42% on Friday. Datadog provides monitoring and analytics platforms for developers, information technology operation teams, and business users in the cloud environment. Looking at a summary of results, you can see that Datadog has increased just over 34% year to date. I did not trade Datadog this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 2.63% versus 18.35% up for SPY, a difference of 20.98%. The Southside is losing to SPY by almost 21%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin has taken a big hit in the last few months. However, this week and the week before, Bitcoin made a big comeback. Will the comeback continue? I don't know, but we'll see. The portfolio is 66.26% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 9.05% of the portfolio. Cash is 24.69%. The cash flow generated for this week was 0.76% of the portfolio account value. The account value changed by 3.07%. Meanwhile, the S&P 500 ETF SPY changed by 0.91%. I sold option contracts on one position this week, and it was a put for $853.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com.